Hello and a warm welcome to South Central on ET Now. This is India's first and only half-hour bulletin that puts the focus on South India. Key news developments, talking heads, and the voices that matter here. My name is Jude Sanath, and these are the headlines we're tracking at this hour. The Tamil Nadu Green Energy Corporation seeks additional funding from the centre for its high-profile 2,500 megawatt battery storage project. The company plans on adding 1,000 more megawatts in total capacity. Trial runs for the Pink Line of the Bengaluru Metro could begin this week as the transit corridor nears its much-awaited completion deadline next year. With elections just months away, the DMK government in Tamil Nadu extends the state's universal basic income scheme for women to 16 lakh more beneficiaries. The scheme now covers a total of 1.3 crore voters. Chennai-based Galaxy Health Insurance plans to hit 400 crore rupees in premiums by FY27 on the back of an expansion roadmap to its hospital and agent network. The company's CEO tells ET Now in a South Central exclusive. And does South India's workforce and talent capital need India's right to disconnect bill more than the rest of the country? We find out in our South Central special discussion coming up next. Our top story today. It's been over a week now since Baramati MP Supriya Sule introduced a private member's bill that's come to be known as the Right to Disconnect Bill. The bill in question proposes to make it illegal for employers to contact employees beyond work hours and removes the obligation for employees themselves to answer work-related communication after signing out. Now, the intent of the bill itself is to help arrive at a clearly defined boundary between work and personal space, all in the hope to bring about better work-life balance. It extends to employees working at their respective workplaces as well as within the confines of a hybrid setting. Over the last few days, the bill has been the subject of discussion and debate, with multiple voices advocating for its relevance now than ever before. Even before the bill came to be, discourse was doing the rounds on whether employees needed to punch in 70 hours at work, as endorsed by none other than Infosys co-founder N.R. Narayan Murthy. So the timing of the legislation, one might say, couldn't have been better. On South Central today, we ask the question, does South India need the Right to Disconnect Bill as an indelible part of its workplace ethos? Does the large human capital that goes to work in these parts, in IT, startups, tech, manufacturing, and many other sectors, need the right legislation to avoid burnout and achieve balance? To help break this down and answer some of these questions, I am now joined by Aditya Narayan Mishra, CEO of Bengaluru-based HR services firm CLHR. Aditya, firstly, thanks so much for joining us on the bulletin today. Was this piece of legislation waiting to be written, given the general attitude towards work and work-life balance in India?
Thank you, Jude, for having me for this program. I think it's an interesting debate. This has been going on for the last few years, especially from that COVID-19 times. So I think the organizations have been today in a sort of a flurry of activities. And the socio-economic changes, which have also happened over the last few years, makes us over communicate by our habit. I think patience is running out, and hence people expect everybody else to respond as quickly as possible. And hence it is kind of impacting people's way of living, uh, the relationships at home, and at the same time, the kind of traffic that many employees face in the cities that they work in, The commute hours are longer. So that reduces that much time for parenting, elder care, household chores, and various other things. Hence, it's an important subject. But my concern is about its implementation and its interpretation by employees as well as employers. It's not easy to implement something like this. While the intent is great, um, it's about recognizing the importance of people leading a balanced life, but implementation is very, very challenging.
Right, but Aditya, I sometimes wonder, and I hear you when you say we began over communicating since the COVID 19 pandemic, but how did working extra hours, always being available on the phone or email, come to be normalized and accepted here in India when the concept of work life balance is so different in the West?
Yeah, absolutely. I think here the aspiration of entrepreneurs, aspiration of organizations by themselves are way higher compared to what a normal organization that you see in the West. And secondly, the need to get a response, need to get an acknowledgement has suddenly shot through the roof. A few years ago, pre COVID, for example, if you asked a question to a colleague of yours, you allowed some time, hoped that that person would be busy or would be preoccupied with something else, is probably forming the response, is probably doing some background work before a job is done. But during this COVID time, when people were forced to work remotely, the need for acknowledging others' presence, the need for responding quickly became more and more important because people were anxious whether the person has seen my message and so on. So there has been a huge socio-economic shift. It's a wake-up call for all of us that we need to understand that nothing changes if there is no instantaneous response. And because there is multi-generational workforce at any workplace today, somebody who's in his 50s or her 50s may have different set of obligations at home and family pressures and one's own context compared to somebody who's in his or her 20s or 30s. So it's a very, very complex subject that we are dealing with.
Perspective on this, and so this begs the question, when industrialists and OG tech founders much like Mr. N.R. Narayan Murthy endorse and stoically defend the concept of a 70-hour work week, do you think that emboldens CEOs to think that this is perfectly acceptable work culture to the point of having legislation now having to course correct? Is that precedent set by folks who were at the workplace and who achieved a whole lot before us, when that is perhaps a bit problematic? Do you think that has forced the private member bill to actually go about course correcting?
No, I don't think so. I think some of those leaders who said that we need to work for extremely long hours and we must work hard and so on, said that in a very different spirit. They said it in the spirit of building India, being aspirational, and all of that. So I fully subscribe to that view of um, someone saying that I want to put 12 hours at work or 14 hours at work every day. That's fine, that's an individual's choice. But you cannot really expect everyone else around you to put that many hours of work. So it calls for a balance, a balance between how much somebody will go outside one's work hours and one's practically possible responsibilities and deliverables to how much more that we can do. And another dimension here I must bring out, in our country today, there is so much of underemployment which happens. There are people who have a lot of educational qualifications, lot of degrees. However, they don't have the skills to really perform a job. So this problem is not only limited to people in their 20s. It's there in 30s, in 35s, and so on. So as a result, what happens is for a job to be complete, you may require 30 hours, but 30 hours of a skilled person. So if you
Right.
put 40 hours of two people, the output may not be as good as what
Right.
a 30 hours of skilled
Absolutely.
person output is. I think that's a difference between what we see
Absolutely.
in India and probably sometimes in the Western world.
Right. Viewpoints may vary, but I think you couldn't have put it better. Balance at the end of the day is all that matters, especially when it comes to drawing the line between the workplace and a personal space of their own. On that note, thank you so much for joining us and helping us break down these insights. Great speaking to you, as always.
Thank you, Jude.
Moving
Thank you.
on, in other news, the Tamil Nadu Green Energy Corporation, or TNGECL, has requested the centre for extra funding for its ambitious 2,500 megawatt battery storage project. The TNGECL has already set up 1,000 megawatts in battery storage and has invited bids for the remainder of the 1,500 megawatt capacity that it is yet to set up. However, expecting a surge in demand, the company has now decided to establish an additional capacity of 1,000 megawatt in battery storage. It has now requested the centre for approximately 18 lakh rupees per megawatt for the additional capacity. Moving on to Karnataka now, it's perhaps Bengaluru's most awaited metro line, and there's good news surrounding the start of its operations. The Pink Line of the Namma Metro in Bengaluru will see its first 6-coach train prototype delivered later this week. What this essentially means is that test runs along the transit line can begin almost immediately, even as the line itself is expected to see operations begin by May 2026. The BEML has a 3,000 crore rupee contract to supply 318 standard gauge metro cars for both the pink and the blue lines of the Bengaluru Metro. The agreement also covers design, engineering, and maintenance support for a period of up to 15 years. Speaking of transit in South India, it seems Vijayawada's long-awaited integrated terminal is likely to make its users wait for just a bit longer. Reports from the ground suggest that completion of the terminal could take place only in March 2026. This date has been a subject of much discourse. It was first set for June this year, before being moved to December, and now March next year. Over 100 workers, remember, are engaged in completion work of the terminal in question. The facility itself saw its foundation stone laid as early as 2018, but a series of factors, including the pandemic, have led to its delay. Staying with airports, the Hosur Airport just took a big step towards becoming a reality. The Tamil Nadu government has laid out a 3,000-acre land acquisition plan to build the airport in the state's Krishnagiri district to service 3 crore passengers every year. The airport itself is likely to take form and shape over 12 villages in the district. Of the 3,000 acres that the government proposes to acquire, 800 already belong to the state. The proposal will now be sent to the Ministry of Civil Aviation for final approval. On to election action now. Ever since the DMK government came to power in Tamil Nadu in 2021, one of the government's much wanted social welfare schemes has been its universal basic income, or to 1.14 crore voters. In fact, over the last 4.5 years, each of these voters, all of them women, have been receiving 1,000 rupees every month to their bank accounts. Now, with elections merely months away, the DMK government in the state now wants to extend the scheme to 16 lakh more beneficiaries. Tamil Nadu Chief Minister M.K. Stalin has said that in the new year, nearly 1.3 crore women are set to benefit from the state's universal basic income scheme. What this also does is mark the start of a well-studied spike in social spending across Tamil Nadu, especially just ahead of elections. Right, on to some corporate action from Chennai now. It's been just 14 months since India's new kid on the insurance block, Galaxy Health Insurance, began operations. Over the last 14 months, the Chennai-based health insurance firm backed by the TVS Group and insurance veteran V. Jagannathan has amassed 85 crore rupees in premium value and launched 12 products. Early today, the company launched its first product for outpatient consultations. In an exclusive chat with me, Galaxy's MD and CEO G. Srinivasan told me that the company was targeting 400 crore rupees in premiums by FY27. We also got talking on the tenets of the insurance bill that has just been tabled and the impact of the GST reforms on the sector. Here's a slice of that conversation.
See, OPD is a very important part of the health insurance need of the people. Because as I said, 62% of the healthcare expenses are due to OPD. The problem the industry had was basically, once you give a cover, how do you manage the claims? That was one issue the industry had, because you need a network of doctors, network of clinics, network of diagnostic labs, pharmacies, to make sure that the customer is able to get proper claim service. The second issue the industry had was how do you manage the claims? Because there was always a concern whether claims, people will make a lot of claims and there could be frauds and abuses. So what we have done is we have sorted out both these issues. In terms of network, as you just heard, we almost have more than 134,000 doctors as part of our OPD network. We have many diagnostic labs across the country, many pharmacies. So we have been able to tie it up through technology. So today, anybody has a OPD claim, he can get it on a cashless basis through these clinics. Or if he has to go to somebody else, his own doctor, who is probably not in the network, we also allow reimbursement. So we have found a solution to the OPD problem. That's why, we are now bringing it as part of this product. We are not giving it as an add-on, something which you can select or don't select. We are saying this is the product. You get a 100% health coverage product. So that's what this Galaxy Twin 360 is all about.
And it's rather remarkable that a 14-month-long insurance company headquartered in Chennai has come up with it in such a short span. It is, of course, also your 12th product in the time that you've been around. What are some of the numbers you're looking at for the Galaxy Twin going forward? Are there any targets that you've had in mind in terms of how to push forward with it?
So I'm not giving any numbers, but I personally feel this is a product everyone should buy. Every Indian should buy a Galaxy Twin 360 because then only you are fully covered. Otherwise, I'm spending a lot of money out of my pocket. If you're saying 50% of, the healthcare expenses are out of pocket, OPD is an important reason for it. So I personally feel this will be a very big product, and we will try to sell it to all the customers where the states we are operating, and I'm sure that this will be welcomed by everyone.
Right. Let's talk a little bit about where we find ourselves today as far as Indian insurance is concerned. Even as we speak, the insurance bill has been tabled. There's been a lot of talk about it. A lot of observers have pointed out how it could be a game changer of sorts. Let's start with the first big tenet of the insurance bill, 100% FDI as far as the Indian insurance space is concerned. How impactful is this first clause going to have, or going to be rather, on the Indian insurance business, and how will it impact the kind of work that insurers do?
See, FDA 100% is very welcome. The reason is, in India there's so much to be done on insurance penetration. The protection gap is very high. And insurance is a highly capital intensive industry. So if you have to cover everyone, we need capital. So here, we're not very sure that domestic capital alone will be sufficient to drive this kind of a penetration. So the government's decision to have FDI 100% is very positive. So it will bring in foreign capital, and we'll use this to really increase the insurance penetration, probably reach that insurance for all by 2047, even earlier. So that way I look at it as a very positive move, and it will definitely help the Indian insurance industry.
Right. But there's a whole lot more, of course, as far as the bill itself is concerned. The composite license allowance, firstly, is, many say, could well be a game changer as far as Indian insurance goes. How do you look at it, and how is it likely to change the way insurance business is done? You're a health player yourself, but could the provision of a composite license allow many insurers, much like yourself, to also diversify going forward? How does it work?
So first, a caveat, we are really not sure whether the composite license is part of the bill. The details of the bill have still not come out. There are conflicting reports. But if it comes through, it's a good idea, because in a market where insurance distribution is a big challenge, it's always good to have composite insurers who can synergize their distribution network to really, increase insurance penetration. It will also give opportunities for players to get into other areas and use their existing network or infrastructure to really sell insurance in a big way. So it's very positive. It's a question of who gets into other lines depends on their willingness to take the risk, put in more capital. But it's a very positive.
Right.
Yeah.
And what about Galaxy itself? Still in your infancy as things stand. Of course, you've started with health itself. Are there plans of diversifying? Is that very much a possibility on the cards?
We are still a baby, so it's early days for me to say this. I think the company and its promoters will take the call at the right point of time. So I won't be able to give a definite answer today.
Right. Going back to the bill itself, sir, there's been so much talk about easing off on minimum capital requirements insofar as the insurance business is concerned. These reforms largely have been designed to both help insurers and the insured on account of their very nature itself. How do you view the capital? I know for a fact that it's not gone through as yet. There's been talk about it as things stand. But if easing of minimum capital requirements does come to be, is there a big win for you as an insurer and the industry at large?
So reducing capital requirement could bring in more players, but these players have to be either a regional player or a very niche-oriented player, because insurance needs capital. So if somebody starts with a 50 crore capital, it's just a matter of time he will need more capital. So I think it probably breaks the entry barrier, but if a company wants to do more business, they should be prepared to pump in more funds.
Right. So net, do you expect the number of insurance companies out there in the market to go up? And if that is indeed the case, do you expect also competition picking up in the sector? And in keeping with that, will there be clear differentiators? And if yes, what do you think those differentiators could well be going forward?
Clearly, FDI, as well as reducing the capital requirements, and also the general interest in insurance, will mean more companies coming into the market. It will certainly increase competition. But what is good about the Indian market is the huge potential which is untapped at this point of time. More players will definitely help in better penetration, increasing the insurance pie itself. So that way it's very, very positive. At the end of the day, we have to face competition. Competition is good for the customer. So we have to be better than our competitors. So we need to have good products, we need to have satisfied customers, we need to have technology driving our operations, we need to take care of the claim service. So if we can take care of the fundamentals and make the customer happy, I don't think anybody should be worried about competition.
Right. It's also going to be 3 months now since the GST, the new GST regime has been upon us, easing off on those GST slabs, 0% GST for health insurance itself. We'll come to the impact on bottom lines in just a bit, but at the get-go, how has the uptick in the demand for health insurance been post-reform? Have you seen a noticeable spike in the number of people now opting for health insurance as before? I know 3 months is a short sample window, I agree, but in these 3 months itself, what has been the uptick in demand?
I would say it's very positive because 18% is a big amount. It's not a small amount. So a lot of customers are seriously thinking about health insurance. Some of them have already taken, but I would wait for some more time to really see the full impact of how many people are coming into the health insurance net. But I think if you talk to people, they say that I need health insurance. Now this 18% reduction means it's now more affordable. Right. I would like to take. So I see this as a very positive. But will the full potential be materialized in 6 months or 1 year? Maybe we'll have to wait for a couple of years. Right. But it's very, very positive.
So in the last 14 months that you've been around, how have the last 3 months been different? Have you seen a noticeable and significant spike? And if yes, to what extent?
Clearly there is a spike. There is a lot of people who are on the kind of border, they are now taking these policies. A lot of people are showing interest. So I'm sure in the next couple of months, a lot of people will come into the health insurance space. So it's very positive. And of course, we are a new company. So we are galloping. So some of this could be due to GST. Some of this could be due to people really showing interest in Galaxy Health Insurance.
Right. Speaking of the GST, easing of GST norms itself, there's been so much discourse, especially when some of us were reporting on the new GST, taxation brackets as well, with regard to the input tax credit, whether it would offset some of the benefits. As a company itself, what kind of impact to bottom lines have you seen in the last 3 months, especially after the new GST easing of norms came into being?
So the impact on the standalone health insurance companies is about 5 to 6% of their on the bottom line. So this is something uniform across the standalone health companies. So the companies are finding their own solutions to manage this impact. But as we expect, the business will go up, and hopefully that increase in business should compensate whatever we are, losing in terms of ITC input credit. So I look at it in a positive way. I mean, maybe there is a problem at this point of time, but with the more and more business coming in, the insurance companies will be able to take care of this.
Right. In terms of agent commissions, though, that has stayed static both before and after the new GST norms?
So, companies have taken different stands. So, we are a very agency, supportive organization. So, we always feel that we need to adequately remunerate the agents so that, they can spend their time and resources to go and convince customers why they should take insurance. So we are also we are not interested in just taking policies from other companies. We are really trying to create new businesses from people. We want to convert people who are not insured into people who are taking policies. So this requires a lot of efforts. So that way, we are quite supportive of the agency force so that, they can spend their time. It should be worth the while for them to, go into the market and do business.
So no cuts in commissions at all, given the support?
We have not looked at it as of now. And there are quite a few companies who have not done this. So we hope that with increase in premium, as people are now looking at health insurance, we should be able to, handle this.
Right. 14 months is no doubt a short time, but you've notched up some pretty impressive numbers in the time that you've been around. The most significant one, I think, is about 85 crore rupees worth of premiums. What are some of the key numbers in this journey so far? I think customer growth has also been a very interesting statistic, agency network as well. If you could just summarize some of the key numbers in the time that you've been around at Galaxy Health Insurance.
So it's been a very, very encouraging journey, something, the kind of numbers we have seen, no new company has seen in this market. You mentioned about the 85 crores premium income, 3.5 lakh customers within a period of 1 year coming into our books. We have almost 7,000 hospital network, the kind of network no company could have built in such a short period of time.